The information provided on this podcast is intended to be educational and informational only and is not considered to be formal legal advice. The listener should not take or refrain from taking action based on its content. Any listener in need of legal opinion upon which to rely in decision making should consider formally engaging an attorney to review relevant facts in detail and examine the pertinent law as it applies to those facts.
Welcome to Real Estate Milestones, where we explore fascinating topics in commercial real estate with knowledgeable industry experts. I'm your host, Ben Malech, and I'm a young real estate professional who is passionate about adding value to people's lives through the incredible power of real estate. My goal is to help you discover what the heck is going on in the industry and how you can get involved. This is Real Estate Milestones, where your future in real estate lies just around the corner. Hello, everybody. Welcome back to Real Estate Milestones. Today, we have Sam Bates, who's the CEO and principal of Bates Capital Group, which is a private equity firm out of Dallas, Texas, with over 200 million in assets under management. Today, we're going to talk about multifamily and Dallas's market, a bunch of the cool things that Sam has going on. So, Sam, welcome on the show.
Thank you for having me, Ben. I look forward to talking to you and hopefully providing information and knowledge to your listeners.
Yeah, definitely. So let's start with, what's your first milestone in real estate?
I think the first one was, looking back on it, was probably about the littlest, but it was just getting that first single family home. It was actually a rental property before I owned my own personal residence. And I remember before we closed, I'd hired a contractor and we had the lockbox. He actually went in and started renovating before we closed. And I found that out, and of course that could have brought on significant legal ramifications, but it basically lit a fire under me saying, this is happening no matter what. What's going to transpire, I got to buy this. And we were probably a week out from closing, and I didn't foresee anything happening, but it definitely made me realize I can't get cold feet and I need to move forward. And there were a lot of, that just then proved that there's going to be a lot of issues that you're going to have to pivot and navigate through. But that was definitely the first maybe milestone. And from there, it's just kind of went into multifamily acquisition, development, land development, almost all verticals of real estate at this point.
Wow. Well, that's a pretty crazy story. It definitely seems like a lot to learn from from that, but I guess it's fortuitous that you're thrown in no matter what, because now we're here. So great. Well, I'd love to hear a little bit about your journey to where you've how you've gotten to the point you're at now, kind of like where you started and what you learned along the way.
Yeah. Starting out, since I was little, I was always interested in money and investing. And I started investing in CDs literally when I was 10 or 11 with the help of my mom and grandpa. And then that moved to mutual funds. And at that time, ETFs weren't in existence. And I started paying attention to the stock market. So I decided to get my undergrad in finance. I was always interested in real estate, but didn't know much about it, to be honest with you. I didn't have any real estate classes in finance. I focused more on the security side and the core classes that we had to have. And then I went and interned at a large financial institution, and they gave me a full-time offer, and I started as an investment analyst out there. I love my job, but I quickly realized we were putting an investor who made 250,000 versus an investor with 10 million in assets in the same portfolio. And it just really didn't make a lot of sense to me. And I decided to go back to grad school, and I got my master's in personal financial planning and MBA. And during that time, that's when the market just tanked. And it made me reevaluate and assess, not only for myself, but if I'm wanting my profession to go out and try to get people to invest in a security or a bucket of securities I have absolutely no control over, that's just not going to work for me. So after grad school, I started a consulting firm. They put me in a division I wasn't aware of existed. And I was in sales and use tax. I thought I was going to be in a different group, but from there, it quickly made me realize I needed to find other alternatives. And in grad school, I read a couple real estate books. And then luckily, Dallas is great for real estate and real estate investing. So I invested as a limited partner in a few syndications, and they didn't do too well, to be honest with you. And that's what made me realize, okay, I should buy single family. And I did that. And after 4 years, I realized you couldn't scale it. I could make a decent living, but I don't know, it just didn't fulfill me. So I started looking at small multifamily deals. I ran into one of my partners now who I used to work with at one of the consulting firms. He was doing the same thing. So he decided to come and partner up. And since you're a young guy, maybe you can respect this or hate this, but we were both in our 20s, and no multifamily broker would give us any day or time of day. And we submitted offers, and we were told some of the offers were higher than anybody else, but they didn't trust we could close. So Michael, who was that partner, he knew a guy from his church who was mainly a single family custom home builder. And we asked him, can you build us a multifamily project? And he had some land that he was actually building a retail strip center on. So we joined forces together, and it's kind of went from there. That was in 2015. And since then, I've been a GP on 15 or 16 projects now. We have 4 multifamily developments in our pipeline that we're basically breaking ground on right now, or done the horizontal construction. We build close to 200 single family homes a year. We always have land development projects in the pipeline. We have a title company, so we've grown almost vertically integrated. We don't self-manage, maybe down the road, but that's very labor intensive. And we have 50 to 60 employees on the home building and apartment building side. So we just feel like it's better to let the professionals on the third party property management side handle it, and we'll work on higher value add activities.
Yeah, well, that's really awesome. And it's, it sounds like you've really opened up the, in terms of like the different capacities you have. It's really cool. And it's funny how you, maybe not the most traditional route. You came, you kind of were an LP, then you were like, okay, wait, I want to do this. And then you went to development. And yeah, it's pretty interesting. That's one thing I love about the podcast, is hearing how people's different stories evolve. So I'm glad to hear yours. So what are the markets that you're investing in? Where do you like to invest? I think I looked at a little bit of your portfolio, and it sounds like definitely some cool markets, but I kind of want to hear how you thought about that, how you chose, and just what's your outlook on these markets.
Yeah, primarily it's DFW. All of our building except one project has been in DFW. We feel like we know, especially west of Fort Worth, better than anybody else. We're the largest landowner in one of the counties west of Fort Worth. So we have the data, we have the knowledge that nobody else can compare to, honestly. And then from the multifamily acquisition side, we spent a few years going hard in Dallas proper, Fort Worth proper, and we just didn't get any acquisitions. So we started looking in secondary and tertiary markets, and honestly, they've been phenomenal for us. There's some metrics that we require before we invest in one, but there's less competition. I think a key is having a good property manager, either locally or one that you've worked with that can go in and work in that market. And if you have that presence, or you're self-managing, I feel like you can go really anywhere. And that's led us to go into 3 other states, Georgia, Florida, and Mississippi, but the property in Mississippi is literally 10-15 minutes south of Memphis. So it's Memphis MSA. And we had either already relationships there or points of contact at those states that we knew if we went in, they could help us manage the properties effectively, and get the returns that we require for ourselves and our investors. And over the last 5 or 6 years, the secondary and tertiary markets have done phenomenal, but at the same time, there's been cap rate compression, there's been rent growth. So there's a lot of things that have helped. And now that there's more uncertainty and uncertainty in the market, we're starting to focus more on the true primary markets again, such as DFW, Austin, Atlanta, the larger cities in Fort Worth or in Florida, just to possibly, if there is a downturn, the secondary and tertiary markets are always impacted first. And depending on what market you're in, you could argue there's already been a downturn. Pricing's dropped probably 10 to 20%. So we just want to get in the core areas right now.
Yeah, it makes a lot of sense. I want to get a little more granular with that one market you mentioned in Fort Worth. You tell us a little bit about, I guess what you liked about that market, how you found it, and then like how you tell us about your competitive advantage there and how you guess utilize that and how you grew that. Sounds very interesting.
That market is Parker County, which comprises Weatherford. It's the largest city, and we've done multiple multifamily developments in that county. That's where we build probably 150 homes a year, and we like that market for several reasons. That you could look at any direction in Dallas or Fort Worth, and there's growth. That you could argue path of progress, but if you're going to Frisco or Plano, McKinney, where is north of Dallas, that's everybody in the nation probably knows about that. Especially if you're in real estate, Frisco, McKinney.
Yeah.
So there's a lot of competition, there's a lot of demand. West of Fort Worth, it's not quite as it doesn't have the trajectory or some of the metrics that maybe a Frisco does, but it's still a very solid market, and it's still a market that's better than I would say most places in the nation. And one of my partners, he's been in that market for 15-20 years. We built our office out there. That's where our 50 employees are. We have independent contractors that work in that market that know it well. So it just gives us I don't think any of the large groups in Dallas or Fort Worth are focusing on Weatherford. There's been some projects that have been built bigger than ours, and some projects that are actually nicer than ours. But like, we can build a property. Our last apartment we built for about 120,000 a unit. That's pretty much unheard of. Some of the properties in that market are selling for 250 a door. So just with the labor force that we have, with our supply chain where we buy the product from, and it's good quality product, we'll compare and compete with the other two properties. Our product's better than one of the properties that's a little bit inferior to the other one, but I know they spent a lot more on their build costs than we did. So from an overall return perspective, I would rather have our product than what they produce with their CapEx budget.
Right. Yeah. Yeah. It definitely makes sense because it's all about, I guess, how much you spend and then how much you can sell it for. It's a
Yeah.
pretty simple equation there. But yeah. I mean, so like that's really interesting. And like I find when talking to like real estate developers and real estate sponsors that like when someone has a competitive advantage, that's the most powerful thing, and that's where they can make risk adjusted returns consistently because they have something that they can do that other people can't do, which just gives them an added an added piece. So I kind of want to know if like how do you try to build a competitive advantage, and like what's the importance of a competitive advantage for you, and kind of how do you see yourself doing that in another market if you intend to?
Yeah, I think just the economy, a scale that we've created, gives us competitive advantage, because from the home building business, we have agents and our engineering team and just other parts of the company looking at land all day, every day, talking to landowners, talking to brokers, so we can get land cheaper than the lay investor from Dallas or from New York or somewhere, I don't think most investors from New York would come in and build. But we have that competitive advantage. We have a dirt moving company where last year it was costing $350 a foot to move dirt. Now it's at $6 a foot. We can still do it for ourselves for $350 or less. So just in the dirt process and excavation process, the horizontal construction, we've provided a lot of value that other people can't. One thing I didn't mention, we import a lot of product from China. That slowed down a little bit during COVID and during the tariff wars, but we have a large warehouse where we can store 18,000 square feet of product if we need to. So there's a lot of advantages we have that a typical syndicator can't do. And that's helped us keep costs low. That's helped us just provide returns to investors that we expect and require. And we've created a name for ourselves in the community. And luckily, we've been able to hire some great people. And they've been a huge asset to us in our growth. And now Daniel, who's the contractor, he's not having to build a house. He can focus on other activities. I'm not having to do the day-to-day on asset management. I can turn that over to somebody, and it's just helped us be able to focus and grow and build out an organization and not just kind of a mom and pop real estate company.
Yeah, that makes a lot of sense. That's really powerful. Yeah, I mean, I'm interested to kind of hear, I guess to preface it, I've heard of some people slowing down their development, saying like, "Oh, we're gonna pause right now because prices are so high. You want to wait till prices come down, or different difficulties, labor." I guess you probably know more than me, but can you kind of discuss some of the difficulties that developers are having now, and then are you able to persevere through those and continue to build?
Yeah, I mean, there's problems, and I feel like this business or game, whatever you want to call it, it's dealing with people and their drama and solving problems that arise from the economy, from whatever. So we did have labor shortages, we did have inflation, like everybody else. One of our projects we finished almost a year later than what we projected, and it was because it took 5 months to get windows. Sometimes we were having to move labor from one house to the apartment or from the apartment to subdivision. So there's definitely problems and issues. I do think we've been able to continue developing because we are buying product at such a low basis and we can build at such a low basis. I mean, another problem that we are having is debt. As the capital markets change, debt's completely changed. I mean, you could get on the acquisition side, you could get debt on floating last year at 250, 3, somewhere in there. That's impossible now. So you just have to pivot and try to mitigate the risk and exposure as much as possible. And I think being essentially vertically integrated has helped us because we can control all channels of the development. We can do the site work, we can put in utilities, we can do everything to turning over the keys to the property manager to help lease it up. So in some ways, I think that's been a big benefit. And we're very selective. Like, over the last 7 years, we've bought, I don't know, 6 to 7 acquisitions. And in hindsight, I wish we would have bought 100. But at the same time, we've provided phenomenal returns to investors. And if we would have bought 100 acquisitions, we wouldn't have done as much development. And I think we're at a place now where when we're building a brand new, like, triple class A student housing development for 160,000. I mean, you can't find 1970s product in Dallas for that. Granted, it's not in Dallas, but we have probably a better tenant base because it's backed by parent guarantors.
Right.
Parent guarantors. So, I mean, we're searching strategically on assets and locations where we can get a better tenant for what we could from a acquisition and hopefully reduce the risks that our investors and we have overall.
Yeah, that's very interesting. Where is the student housing deal that you're investing in? And how are you looking at that industry? Because I know that there's a little bit of a sour taste in people's mouths
Yeah.
post-COVID. Given that some colleges didn't have their students come back right away, but that's obviously an opportunity for investors who long term believe that people are going to go to college. So yeah, I want to just hear kind of your thoughts on that and where that's located.
Yeah, and let me preface, I'm not an expert in student housing at all, but I do understand that one market. It's in Stephenville, which is 90 minutes or so southwest of Fort Worth. And the school there became Division I AA a few years ago, and ever since then their enrollment skyrocketed. There are roughly, I think, 6 schools in the nation where enrollment increased during COVID. They were one of them.
Wow.
They have about 15,000 students now, and they have 115 true student housing units. And our projects, it's the smallest one we're doing right now. It's only going to be 84 units, but it's 252 beds. And with that supply demand offset, we feel like we can easily fill it, and we'll be the newest in the market. We'll have the best amenities, which a lot of students want. And we think it's a great opportunity. Like, we've done the horizontal construction. We've started to go vertical. We got the appraisal back, and just from construction costs to what they project the appraised value to be, we're building in over 10 million of value, just from the pricing of the construction versus the valuation when it's completed. So those are some areas that we look where we can always go in and create a lot of value just from the build, and then refinance and basically do like a single family burr or multifamily, which a lot of people are doing now, is going in, fixing it up or building, renovating, and then refinancing and distributing a lot of their cash back to investors.
Yeah, absolutely. And so I'm curious, given just we've kind of painted a little bit of the picture of the market in its current condition, and I'm kind of curious, who are your investors, and if you have investor conversations, how are the conversations going nowadays? Like, if you can like kind of tell us like maybe what the people are thinking that you invest or that invest with you, and kind of what are you saying to them, and how's everyone thinking about it?
Yeah, our typical investor avatar, or just investor, or people we've had relationships with over the last 10 or 15 years. And we personally know them. The last couple of years we're getting referrals, so we don't have as intimate of a relationship with them, but a lot of them are, since I came from accounting, consulting, and finance, a lot of them are in that arena. One of my partners, he's a CPA. He also owns a business franchise, or he's a franchisee of a business. So a lot of our investors come from that franchise. And everybody is cautious. I mean, the stock market, depending on what day you look, is down 20-30%. So there is a lot of trepidation with investors. I do think in our market, and in real estate, it's insulated. Like, I was having a conversation with a investor that lives in New York, works at Citigroup, and she was referring to what was going on with New York real estate. And I'm like, well, yes, it's great, but it's not comparing apples to apples at all. What's happening in New York is completely different from Dallas, and what's happening in Dallas is resi versus office versus multifamily, whatever, is different. So I think you have to take a very focused look on what's going on. We have got away from acquisitions this year. I do think acquisitions were overpriced. I knew interest rates were rising. I didn't know how much. We still don't know where it's going to peak, but I knew pricing was going to come down. So that's why we did focus on development. And when we are building it significantly below replacement value, I think it's a good bet and gamble to take. I also know that all the reports and projections of showing people moving into the Texas Triangle, which is Dallas, Houston, Austin, and you could throw in San Antonio. it's going to double by 2040 or 2050, the population. So the secondary and tertiary markets, they're going to have ripple effects. I grew up in West Texas. It's really close to nowhere, but it's been crazy to see the economy the last 5 to 10 years boom there. And now it's over 300,000 people. And it's partly business growth, partly they're getting a big healthcare system. But you can look, and why I bring that up is you can look anywhere in Texas and it's growing. And I think that gives us an unfair advantage. I'm not saying it's right or wrong, but it gives us an unfair advantage when people keep coming in and they need housing. And we already have an affordable housing crisis, or definitely an issue in the country. And we're trying to help fix that. Depending on some estimates, I've seen 7 million shortage. I've seen NAA say there's a 4.2 million unit shortage just of apartments throughout the nation. So we're in a great industry to help provide the supply to match the demand at some point.
Yeah, it's a great point. And yeah, it's a simple supply demand equation. As long as you believe that people are going to want to have a roof over their head, they're going to want to, they're going to need a place to live. So but I guess going on that, like, have you ever thought about branching out in terms of asset class and trying out other things? Because I know if you are in like a tertiary market where it's growing, imagine building the retail and building the office, or not necessarily the office, but building the retail and the parks and everything. And like, if you can create like a whole place where people want to come, and you have this whole work from anywhere, people have remote jobs, why not create like a whole new town in Texas?
I don't know if we have that expertise. We have built retail, a few retail developments, but I want to focus, and we want to focus on our core competencies, to be honest with you. I've thought about investing in industrial or some other, maybe retail, but I think before I do it myself, I'd invest as a limited partner and try to gain as much knowledge as possible and then take it from there. But we have invested in other, using the word tertiary, kind of other tertiary companies that can help with us. We actually had a call today about starting another company that would help significantly on the concrete side of the business. And obviously we would be selling to other consumers, but we could participate on the upside on that.
Yeah, that's awesome. Yeah, maybe I was distracting you with shiny object syndrome, trying to create new little towns in Texas. But
yeah, I don't know if that's one thing I've learned over the last few years is try to stay in your lane and do what you're good, because like you said, in real estate and in general, there's so many ways you can make money. And in my late 20s, early 30s, I definitely had the shiny object syndrome, and I was trying to go here, there, everywhere. Like, we could easily get into self-storage. I don't know that. I'd have to start basically from scratch with broker relationships, with things like that. So instead of doing it, we're going to GP with a group that's done it. And it just makes sense to let them use their knowledge and their connections, and we just kind of participate on the backside. And luckily it's a group that wants our help and needs us maybe to sign on the note. I'm not really sure all the details, but we're in talks with a self-storage group that's backed by a couple institutional partners, and hopefully we can grow that to a large scale as well.
Yeah, well, that's pretty interesting. That's awesome. Well, you ready for the lightning round?
Sure.
Okay, so if you could pick any superpower, what would it be?
I think it would be teleportation. I'm an impatient person and love to travel. So if I could fly over to Europe or China whenever, that'd be awesome.
Yeah, that's awesome. So what's your favorite book, or what's the one that's helped you the most?
I read 200 book. I've read 200 books in the last few years, so it's tough. Maybe Who Not How is the most recent one that's impacted the business significantly.
Yeah, it's a good one. I've definitely read that, and felt like just to totally switch my my framework of thinking, because I just had gotten to how
Yeah.
right.
I
From
think
what?
that's maybe I shouldn't say every entrepreneur's struggle, but any person who's a control freak, and I'm definitely a control freak, um, giving the task to somebody else is nerve-wracking. But if they can do it 50% as good as you, and you can spend that time on more value-add activities, it's definitely worth it.
Mm-hmm. Especially if you can find someone who can do it 100% better than you.
Oh
Some
yeah,
people,
definitely.
yeah. So what motivates you to continue every day?
I think there's multiple reasons. I feel like I've been gifted in many areas, but I've always thought of how to make money and how to invest wisely. And one of my goals, I grew up in a very blue collar community. My dad was a farmer, my mom and dad were teachers. And one of my goals is to make as many millionaires as possible. And then the other reason is just to give back and to make this world a better place. There's so many people and organizations in Dallas and Texas and the US and the world that we can impact through money and being able to provide not just financially, but also give back time, energy, and knowledge to them.
Yeah, that's awesome. And so what advice would you give to someone who wants to follow in your footsteps?
I think network and ask as many questions as possible and don't be afraid to fail. I think from an early age, especially in school, you're taught not to fail. And the biggest lessons I've learned and different things that have catapulted me along my career is failure. And I think people are just afraid to do that. And obviously, you need to learn from that and improve and better yourself. But I learned significantly better from failure than any success I've had.
Mhm. Yeah, that makes a lot of sense. So since I put you on the spot, I'm gonna give you a chance for revenge. So what's a question you have for me?
um, that's a good question. I think since you are a very intelligent but a young guy, how are you navigating the real estate market right now? And with you being 21 or so, and we are in a quote unquote recession, what's your plans to get into real estate in the future?
Yeah. So I mean, I guess one big difficulty is it's already hard to get financing, to get lenders to give you money.
Yeah.
So I don't think it helps to not have a track record. So I feel like the one major key would be partnering with someone who has more experience, or and yeah, I get like someone who can have capital to back me and who can you know to make sure we can get the deal done. But it goes even further because it's, I still have a lot to learn. And so it's really about like, I want to see as many deals as possible, whether, I'm participating in them or I'm, working for someone who's does a lot of deals, but I really just want to see a lot of deals, develop this superpower of being able to see like, oh, like I can tell that's a good deal. Let me just run the numbers, make sure. But, I'm developing the sense like, here are the risks, here are the upsides, here's the potential. I can just tell that that's good. And I want to learn from someone who has that, who I can ask questions, who can be a mentor, and that where I can, really dig in. I mean, long term, I'm very bullish on multifamily. I really believe like it's about time in the market versus timing the market. So it's
Yeah.
like I believe that for in 60 years, people are still going to like to have roofs over their head while they sleep. And that's really a pretty strong investment thesis because who knows if people are going to still use Facebook, right? And who knows who's
Yeah.
going to, whatever with any of these technologies, everything's always changing. But I do believe that as long as we're human single physical space, we're going to want to have a roof over our head. So that's just fundamental to my belief in multifamily. And that being said, I believe even with a recession, with rates high and prices coming down, the deals might not look as good. But the returns might not be as soon. You might not have great cash flow. You might have to put a lot more money up. But if I could acquire while the prices are lower, even with maybe a low amount of cash flow, that when rates come back down, which I believe they will, I can refinance, probably cash out a lot of equity because if the rates come back down, the prices should go up. Um, take out some equity, and then my cash flow will then be, then boost my cash flow and then continue to, put that money into more real estate and create more places or improve more properties and grow my portfolio that way. But yeah, I mean, very optimistic and excited. But first key or the main focus is repetitions, learning, getting my hands dirty, and just gaining that experience.
Yeah, that's awesome. I wish I was in your place at 21 or at 21 or 22, however old you are, because you know so much more about real estate than I did at that age. And it is about repetitions. It's about meeting people, networking, and especially early on, I never didn't take a meeting because you never know what it's going to turn into. And now I'm more selective with my time, but there's been meetings I've had or people I've met at conferences that I didn't think would lead to anything, and they've led to literally millions of dollars. So it's definitely worth. I love what you're saying and repetitions and how you're going about it.
Yeah, I appreciate it. It's exciting to meet everyone because it's just like purely by nature of age, everyone has a ton to teach me. I mean, I can learn a lot from younger people as well, but just the fact
Yeah.
that they've seen so much more, it's like, I feel blessed to, talk to anyone and get anyone's opinion and just hear different perspectives that I can weigh and integrate into, my knowledge. So yeah, it's awesome to be in this position. I also have the college passport where people like to help college students. You get into certain
Yeah,
rooms with that.
that's awesome.
Great. Well, Sam, it was great to have you on the show. Learned a lot and enjoyed learning about your markets and what you're up to. Very exciting company you have, and I'm excited to see how you grow and continue to progress. But is there a way for people to find out more about you if they want to learn more and check out what you got?
Yeah, definitely. The best way to reach me is at batescapitalgroup.com/invest, or I'm on social media, but I just don't get on it that much. So you can connect through Facebook and LinkedIn as well.
Awesome. Sounds good. Well, Sam, appreciate you coming on the show, and everyone, keep making milestones. Before you go, I just wanted to say thanks again for tuning in to another awesome episode of Real Estate Milestones. If you've been enjoying the show and you'd like to offer your support, please leave a 5-star rating and review on Apple Podcasts. It's the best way to increase the show's visibility and help the message get out to a greater audience. I really appreciate your time and support, and keep making milestones.